Stocks did finish the week higher, but it could have been even better if it hadn't been for the financial sector. Three big banks, JP Chase, Citigroup, and Wells Fargo, all kicked off earnings season today. Investors had hopes that the results would be enough to snap that sector out of its recent slump, but that didn't happen. Wells Fargo missed expectations, and despite better than expected earnings from JP and Citi, investors apparently were convinced that business should have been better. It pressured all three stocks in trading today. Leslie Picker has more now on the disappointing day for banks.
Three of the largest banks, JP Citigroup, and Wells Fargo, receiving mixed reception from investors today after reporting their second quarter earnings. Wells Fargo's numbers demonstrate it's still climbing out from the years-long scandal over fake accounts that were opened so employees could meet their sales targets. Their revenue and profitability declined during the quarter. The numbers showed particular weakness from mortgage banking thanks to higher interest rates. Citigroup saw some weakness in their consumer banking side with little to no growth in their branded credit cards unit and retail services. The firm saw a bit more strength from the business it does with corporate clients in terms of lending and helping large investors trade equities. JP Morgan's results were a bit more of a bright spot among the banks reporting today. The firm posted record revenue and profit and growth in nearly every metric reported. CEO Jamie Dimon touted what he sees as a strong environment for banking. He says consumers and their companies have money to spend and people are building houses, all of which are positive for JP Morgan and the industry as a whole.
Consumer confidence and business confidence are very high, albeit off their highs, probably because of something like trade. So if you're looking for potholes out there are not a lot of things out there, and growth is accelerating. And, of course, things are always a little bit different.
Both Dimon and Citi's chief financial officer, John Gersbach, said on separate media calls that the trade war has only tangentially affected their businesses because it creates uncertainty for companies. Bank of America, Morgan Stanley, and Goldman Sachs report next week. For Nightly Business Report, I'm Leslie Picker.